Okay. Good afternoon, everyone. How are you doing? All good? Yes? Okay. Just wait for a minute so that online students join. Then we can continue the class. Had lunch, huh? Everybody? No. 2 to 4 is the class. Online students will have while seeing only. What about offline students? So tomorrow onwards you finish off your lunch and then come. Don't eat heavy also. Don't come and sleep in the class then. Yes. So in the last class we discussed about importance of company secretary. Correct or no? Your question as to why I need to learn accounts. Yes, sir. Sir, all subjects. Okay, sir. Why accounts, sir? Correct or no? But we understood why accounts is needed because you as a company secretary will play a very pivotal role in every company, because based upon your judgment and your assessment, company management or the shareholders or the stakeholders may decide on to certain things. Clear? So company secretary needs to know accounting. Of course, he will not sit and do accounting, but he should have the knowledge of accounting, because when the financial information presented to him, he or she should be able to judge as to whether they are correct or not. Yes or no? Yes. Now today we will be discussing certain concepts, certain conventions, certain principles and assumptions. Okay. First thing, let's start with a concept called as business entity concept. So let's assume you all started a business. Say tomorrow you want to start a business. Say one person wants to start a supermarket, one person wants to start a pharmaceutical, one person wants to start a whatever you may say. Now, when you start a business, my question to you is whether you and the business is same, or you and business are two different people. Not exactly people, but two different status, we can say. Correct? Yes or no? Say for example, sir, how you are saying that it is two different sets, sir? See, simple. Whatever happens in the business, sales or purchase or whatever it is it personally impacting anything in your personal life or personal status? Answer is no. Anything that happens in the business stays in the business. Correct or no? It is not that anything happening in your personal. See, your feelings are not put into sale in the business. Correct or no? Or you are not buying anybody's feeling in the business. Business is purely commercial. Correct or no? So likewise, always remember, whenever any person starts a business, the business is different than the person. The person becomes the owner of the business, but he will not himself become the business. Understanding? So the business is different, the person is different. So for that is where when we start the business and when we put the money in the business, it will be considered as contribution by the owner. Understanding? Why? Because business is different, owner is different. Any money coming inside the business has to be accounted. Correct? But when owner or the business owner puts the money into the business, is the business selling something to the owner? No. Correct or no? Is it purchasing something from the owner? No. But how do you account this money which has been received from the owner? We call it as contribution by the owner to run the business. Understanding? So whenever owner contributes the money to the business, we puts the money into the business, we call it as contribution, and the one more name for it is called as capital contribution. It is a capital. Understanding? So capital means what? It is a fund which is used to run the business. Clear, everybody? Yes. So that is your first concept, the business entity concept. Clear? Now let's go for next concept, going concern. Now my question to you, when we start a business, what is our intention? To make money, to earn profit. Correct or no? We want to earn profit, We want to continue doing the business. So when you start the business, will you think like this, I want to close this business in 1 year? With that intention, anybody will start a business? Huh? Nobody will start. Everybody's intention to start a business is what? We will run this business, correct or no? I will run, maybe my children will run, maybe my grandchildren will also run if the business becomes big, correct or no? In India, many of the businesses are transited to their next generation, correct? Maybe not in the same form, maybe in the different form, correct? So Dhirubhai Ambani started in a very small trading business. Slowly it went to petroleum, crude oil. Then slowly Ambani took over. They again diversified the business. Yes or no? So the intention of starting a business is very clear. One is to make money and to keep making money. There is no full stop. I want to continue making the money. So the whole idea of this going concern is that only, Appa, that business will always continue for foreseeable future. What future? Foreseeable future. Sir, what is the meaning of foreseeable future? The meaning of foreseeable future is nothing but just assume like this. Business will at least continue for the next 12 months. Understanding? So that is the concept of going concern. So any businesses when they start, they will always have, especially when it comes to our Marwari friends, the Marwadi friends, they all are very good with this. So whenever they start a business, they give 1000 days. In 1000 days, if it clicks, it clicks. If it doesn't click, they will shut down. Correct? So they also are following going concern. Correct or no? They are giving timeline of 1000 days. 1000 days means almost like 3 years. Correct? So they are also giving timeline. So it is having going concern. But understand, first year, when the first year gets completed, you still have how many years left? 2 years. Is it fulfilling the going concern assumption? Yes. Why? Because the business will continue for foreseeable future. Foreseeable future is another 12 months. Second year, when you complete second year, will there be going concern assumption? Answer is yes. Why? Because business will continue for another 12 months. Third year. Now, end of third year, let's say business didn't click. Will you continue the business? Answer is no. The principle was what? 1000 days. 1000 days are over. So after third year also I am making losses. Is it good idea to continue? No. So in the year 3, when you complete the year 3, your going concern assumption is not getting fulfilled. Why? Sir, year 1 alli ittala sir. Year 1 alli ittu. Why? Because we thought we'll run another 12 months. Year 2 nallu ittu. Why? Because we are still running another 12 months. But year 3, if your business would have got profited, andre you are running good, you will continue the business, then going concern assumption would have been fulfilled. But now what is happening? Fail. Business has been failed. So that is why going concern assumption will also get failed. It will not get fulfilled. Am I clear? Everybody? Yes, understanding what is going concern? Going concern assumption is nothing but upon which we all think when we start the business that we will continue the business. So going concern assumption says any business will be considered as continuing for a foreseeable future. That foreseeable future can be quantified like 12 months. Clear? Everybody is understanding? Following? Okay. Next. So we saw business entity concept. Now we saw going concern concept. Next, what we'll see, Appa? Dual entity concept. Dual entity concept. Now, what is this dual entity concept? Understand carefully. Whenever a transaction happens, whenever any transaction happens, there is always two legs to the transaction, just like human beings. Correct? Sir, how is that possible? Can you explain? Yes. Say for example, I sold goods worth 1000 rupees for cash. Now look at the statement. I sold goods worth 1000 rupees for cash. Now here, what are the two legs of transaction? Sir, first leg is you sold the goods. Correct? Okay, sir. What is the second leg of the transaction, sir? Cash is received. Correct or no? So first leg is you sold the goods. The second leg is cash has been received. You understand? Every transaction can be broken into two parts. Every accounting transaction can be broken into two parts. Sir, now cash is there. Sir, what if we are selling it on the credit? Fine. When you are selling it for the credit, sale of goods worth 1000 rupees on credit to Mr. A. Now, goods is being sold, one transaction. Now, second transaction, receivable from Mr. A. Correct or no? Yes or no? Following correct? So, first transaction remains the same. Sold the goods. Second transaction here, instead of cash, it will come as receivable. Am I right? Yes, everybody is following. Anything you take, sir. Any transaction. Sir, salary paid 5000 rupees. Correct? Salary is an expenses. First transaction. Correct? Second transaction, cash being paid to them. Sir, purchase of goods for cash. Goods being purchased is one leg of the transaction. Cash being paid is the second leg of the transaction. Understanding? So, dual aspect concept means for every transaction, there will be two legs to that. The same concept is followed in the entire accounting where we follow debit and credit. The words which is mostly hated by all the students because it is not clear what to be debited, what to be credited, nobody knows. Correct or no? So, the moment you hear debit and credit, it will be like shivering. Correct? But understand. So, entire accounting is depending upon this dual aspect of every transaction. So, the transaction itself will always have a dual aspect. So, the same dual aspect is being captured in the form of accounting in the way of debits and credits. Clear? Everyone is following me? Any doubt? No doubts? Pakka? Next. So, first one is business entity concept. Second one is going concern concept. Third one is dual aspect concept. Next, fourth one. You can take, oh, you want money measurement? Okay. Money measurement concept. Sir, now what is money measurement concept, sir? What is money measurement concept? Simple, sir. The money measurement concept is nothing but every first class, you remember? I told you accounting is something which will limitation of accounting we have seen, correct? What one was the limitation was what? It doesn't capture anything which is in non-monetary, correct? So money measurement means exactly same. Accounting will capture only those things which can be measured in terms of money. That is one of the limitation also. How, sir? Simple, sir. When we hire a person with so much of talent and experience, can we show his talent and experience in the balance sheet? No. But can we show his salary being paid in the balance sheet and P&L? Yes. Understanding, everybody? So, whichever can be measured in terms of money can only be recorded in the books of account. Which can never be recorded in terms of money can never be recorded. That is one of the limitation of accounting. Is everybody following me? Yes? Okay. Next. Shall we take accrual? Yes, sir. What is accrual concept? Anybody? What is accrual concept? Whoever is joined online can also put your answers in the chat box, and offline students can also help me to decide, help me in answering what is accrual concept. Cash transaction? No. There is one more name for this. Mercantile. Yes. What is accrual concept? The concept is simple. What accrual concept says is every transaction should be recorded as and when it is done. Sir, understand Aglilla. Listen to me carefully. Say for example, let's take income. My question to you, when I sell the goods worth 1000 rupees to you on credit andrena, without taking the money, I'll receive the money on a later day. Can I record this transaction as sales today itself, or should I wait till the day I receive the money from you? I'll repeat the question. I sold 1000 rupees worth of goods to you. Clear? Now, you say, sir, you know me well now, sir. I'll pay you after 1 week, sir. Right now, my financial situation is very tight. I said, okay, fine. Now, should I record the transaction today itself when I have sold, or should I wait till cash is received? Always remember, accrual concept says this only. Don't wait till the cash is received. Record the transaction as and when it is happening. Cash is just a binary. It is end result. Don't worry about that. There are two concepts. One is mercantile. One is accrual or mercantile. The other way is cash. This is not allowed to be followed. That means what, sir? You told me, no, that, sir, we will record it only when cash is received. No, not allowed. Your accounting says, why you have to wait till cash is received? You have already earned the money, correct or no? 1,000 rupees the moment you sell the goods, it means you have already earned the sales, correct or no? And when you know that 1,000 rupees has been sold, you will also purchase again that same goods to sell it again. Sir, I have 1,000 rupees in my shelf, goods, I sold it. Now my shelf is empty. Will I wait till he give me cash to replenish my shelf? Or will I straight away go and buy from my vendor the goods? I will go and buy my goods from the vendor, correct or no? Shelf always, in shelf I had last 1,000 rupees worth of goods, I sold it to you. Now my shelf is empty. In the shop, if my shelf looks empty, it is a very bad, correct or no, for any business. Your business should look always filled with goods. So now what I will do, I will immediately go to my supplier or my vendor, I will purchase the goods. I will also purchase the goods on credit only. Why? Because I don't have money. The money which I have to receive from a customer is not yet received. So I will say, see, once I receive this money from the customer, I will pay it to you. Right now I need goods to my shop. So my creditor says, okay, fine, you take the goods. Now I will bring the goods. Now my question to you, did you wait till cash collection for purchasing the goods? Why? Because in your mind, you know, transaction has already been done. He will pay me 1,000 rupees and I will pay my vendor 1,000 rupees. Correct or no? This is how we operate. Just imagine, sometimes you as a student, your month end pocket money is over. Correct? But your friend has excess money. So what you will do? You give me 200 rupees. Anyhow, I will get the money in the next month. No? That time I will give it back. Correct or no? So you already know that you have earned the money for next month and you are ready to spend now only. Right? Similar to that, transaction has already happened, you have already earned the money. Only problem is collection of the cash. Correct? So what your accrual concept says is, record all the income as and when it is earned. As and when it is earned. That means don't wait till cash collection. The moment you sell the goods, you record the transaction. Then it also says, record all the expenses as and when it is incurred. Incurred means what? Sir, in simple rule, every month end on 30th, you have to pay salary to your employees. Everybody knows that, correct? But salary will get processed on the 5th of next month. So my question to you, salary was an expense on 30th, was it expense on 5th? It was expense on 30th itself, correct or no? Because you knew on that day only I have to pay the salary. 5th is just a mere payment date. Expense should be booked on 30th itself. So again, for expenditure, what it says, expenditure should be recorded as and when it is incurred. Am I clear? Everybody is understood? So that is your, yeah.
So what if the entered and the person doesn't pick the money?
I'll come there. The question, student has asked me a good question. Student is telling me, sir, what if the customer doesn't pay the money at all? And what if I don't pay the money to the vendor? When customer doesn't pay you the money, it is called as bad debts. The debts which you are unable to collect. Understanding? Vijay Mallya to SBI Bank. Bad debts, gone. Sir, what to do, sir? That is considered as loss to the business. Clear? The same thing will happen to him also. When I don't pay the money, gain from him to me, but loss to him. Correct or no? So 1,000 rupees loss, 1,000 rupees gain for me, no effect. But for him, 1,000 rupees loss.
So but it is already entered that he is paying.
No, I have never told it has been paid. 2 legs of the transaction. When I sold the goods on credit, 2 legs of the transaction, what are those 2? 1, sale of goods. First leg. Second leg, Cash received Allah. Cash to be receivable. I never said I have received. I said it is going to be received. Going to be. I am going to receive it in future. Sir, receive aglilla. Receivable cancel. Bad debt. Clear? Same thing happens with him. When I make the payment, when I purchase the goods to him, I have not done the payment, but I will show it as payable. But the moment I don't pay it to him, reverse. Correct or no? Illi bad debt baralla. Here bad debt is not there. Bad debt is only when you are unable to collect from the customer. For him, I am the bad debt. For me, he is not the bad debt. I will say vendor payment waive off. He waived off my payment, which he has not, but I am assuming myself. Correct or no? Yes. So this is considered as income. The bad debt is considered as expense. This is considered as income. Clear? Everybody? Yes. Okay. Next. But in cash system of accounting, you will record the transaction only when cash is actually moved in or moved out. But in accrual basis, you don't wait for cash movement. No. You will record the transaction as and when it is done, as and when it is earned, or as and when it is incurred. Clear? No connection with the cash. Whereas under cash system of accounting, sales, purchase, everything will be done based upon the cash movement. Sir, is it allowed to do? I want to do cash basis of accounting. Answer is no. You are not allowed. You have to do accrual basis only or mercantile basis only. Only one organization follows cash system of accounting. Anybody knows what it is? Bank. RBI. Only government follows cash system of accounting. Why? Because government or government departments doesn't have anything called as profit motto. Are they here to make profit? Correct or no? So whenever they receive the money, they will record it. Whenever they spend that money on development, they record the expenditure. Only government can follow cash system. Because government doesn't pay income tax. How will they pay income tax? First of all, the money which they are getting is only income tax. Or any tax, GST, income, whatever revenue form. Again on that they will pay revenue? No, they will not pay. Clear? So that is why they follow cash system of accounting. Only they are allowed. We are not allowed to follow cash system of accounting. Is that clear? Yes. Next. Periodicity concept. Now let's link this with this one. Okay. Now I told you going concern is something where you will assume that business is going to continue for foreseeable future. Correct? Now foreseeable future, we don't know, sir. For your understanding, I told 12 months, but nobody has defined what is foreseeable future. Foreseeable future, never ending up. Clear? Now tell me, let's come back to you guys. If you have attended from class 1st standard to class 10th standard without exam, what would have happened? 1st standard in the 10th standard or exam illa nimge. Huh? You don't know where you are standing, correct or no? No performance evaluation, no understanding. First of all, we will not go to school only then. Anyway, exams are not there, correct or no? Allog malkoladeno, I will sleep in the home only. Correct? Yes. But say for example, when you go to the 1st standard, they are called as primary school. Correct. Then they will call it as secondary. When is that? 5th to 7th. Then from 8 to 10 they call higher. Now my question is, 8th standard to 10th standard, no exam at all. Because in 8th standard only you know, I am now higher. Correct? Exam illa. 8th aitu, 9th aitu, 10th aitu. Say for example, there is no concept of 8th, 9th, 10th also. Why? Because the exam pass agli, what is the concept of 8th, 9th, 10th? 8th to 10th, one day, secondary school. Correct? Will we be able to assess? Now also, see, if you take out exams, still 8th, 9th, 10th you continue. If you put exam also, 8th, 9th, 10th is there. My question is, if exams were not there, what would have happened? We would have never been able to evaluate you, correct or no? Judge heng madbodit. Are you really going to the school? Are you going to the school and studying there? To get that judgment. what we did? We conducted exams. Otherwise, when you joined on 8th standard, you know, right? I have to complete till 10th. Foreseeable future were already there. 10th standard mata bidak baralla. 10th standard mugislebeku. Business will continue till 10th standard, no matter what. Correct. But how will you evaluate each standard? We didn't know. That is why what they did do, that secondary education was split between 8th, 9th, sorry, higher education was split between 8th, 9th and 10th, and each year they gave exam to get qualified and get promoted to the next standard. Correct or no? Going concern is there in 8th standard? Yes. Why? Sir, 3 years I have to study higher school. Going concern is there. Foreseeable future. But can you evaluate just because of going concern? No. So how to evaluate, sir? Break those years into 3 years. Give the name 8th, 9th, 10th. I broke that 8th, 9th, 10th. Insert an exam. Now we will evaluate every standard. So this, how did you break that entire 3 years into small periods, and each period you try to evaluate your performance? Correct or no? Accounting, or sorry, periodicity concept explains the same thing. Business will continue forever. Correct, appa? Foreseeable future. Now, Reliance has shut down, huh? No. Reliance was incorporated long back, running till now. Correct. Say if there was no periodicity concept, what would have happened? I will tell you. How do you judge the performance of the Reliance? Correct. How do you judge? Sir, every year they come up with the balance sheet and P&L. We look at it and we will analyze the figures, whether they are going good or not. Now my question is, there was no, the balance sheet P&L should have never been prepared. No, why? Because business will continue forever. How did you prepare balance sheet and P&L? You only said no, business will continue for forever. How can you prepare balance sheet and P&L? Correct. So that is where your periodicity concept comes and says, boss, wait, I know business will always continue forever, and we will understand the profit and loss only at the end of the business life cycle, and that will never happen. Correct or no? Many of the businesses are running from ages. They will never shut down. Then how to judge them? So what periodicity concept said is, wait, hold on. Let's do one thing. Let's create a 12 months period to judge the performance. Clear? Let's create 12 months period. So in our India, the 12 months period start from April to March. I know business will keep continuing, but let's keep judging only 12 months performance, 12 months performance, 12 months performance. Thereby, we will at least understand whether we are going in the right direction or not. Clear? So periodicity concept is nothing but breaking up the life of a company into 12 months. Clear? Everybody understood? Any doubts in this? Next. Cost concept. Okay. Now what is cost concept? The name itself suggests cost. Limitation, you remember? First limitation, historical costs. You purchase land in 2001. Say you purchase the land in 2001 for 1 lakh rupees. Now, which year you are in? 2026. Now, the same land has become 1 crore. But in your balance sheet, land will be shown at 1 lakh only. Land is shown at 1 lakh only. Sir, why? Sir, why? Cost concept. We will always record the transaction at the cost which we have actually paid. Clear? How much cost did it fall for you? That means how much cost did I incur to buy this land? 1 lakh. So I will record it at 1 lakh. Understanding? So that is cost concept. So businesses will always be recorded based upon the cost being incurred by the business. Of course, there are another things which will come in future. We call something called as revaluation. We revalue also the plant and machinery. But remember, revaluation is again a different concept. But cost concept says all the transaction of the business will be recorded at cost. Not recorded. That is what I am telling you. Sir, land doesn't depreciate, but land appreciates. Correct. So your cost concept says we will not recognize the appreciation. You record it at cost. Sir, no sir, but I want to consider the appreciation. That is where your revaluation will come into picture. Revaluation or fair value. These are concepts which will come into picture where certain times management will reevaluate your assets. Clear? Sir, when is that? That is a different case. It is covered in accounting standard 10 when we can reevaluate and all those things. But usually remember, land and building will get depreciated, but land doesn't get depreciated because land is always appreciated. But revaluation of land is not done by many of the organizations because it suddenly creates imbalance in the balance sheet. Clear? 1 lakh crore, if you touch it to 1 crore, then it suddenly looks very bad. So company may opt to reevaluate, company may not opt to reevaluate. Clear? Yes. So that is your cost concept. Is it clear, everybody? So cost concept is nothing but in one more example, if I want, forget about land. One more example. Sir, I purchased goods for 1000 rupees yesterday. Today the goods is 1200. At which cost should I record? 1000 or 1200? 1000 rupees. What is the cost you have paid? 1000. Don't worry about the market price. I want what is the cost you have paid. I have paid only 1000 rupees. Record it at 1000 rupees. Clear? Sir, yesterday petrol was 99. Today it is 110. How much you paid? 99. Record it at 99. Sir, today I paid 100, sir. Record it at 100. Clear? Everybody? Yes? Okay. Next, realization. Sir, now what is realization concept? Anybody? The word realize, we keep using in our day-to-day life, correct? I realized it later. I was wrong. Correct? No, I was right, but I accepted whatever he told. But now I realize that I was right. Correct or no? So what is the meaning of realization? To true value. Okay. See, correct. Realization means you understood that whatever it was true. Whatever you thought that day was actually the truth. Correct. Now, in accounting, what does realization mean, sir? In accounting, realization means converting anything into form of cash. Cash andre not physical cash. It can come to bank also. Say for example, realization. I have 1000 rupees goods. Can I say I sold 1000 rupees goods? You have 1000 rupees goods. You can say you sold 1000 rupees goods only when you realize the sales. That means you actually sell the goods. Correct? That is when you realize that now sold, goods is sold. Now 1000 rupees can be recorded. Then when you collect the cash, that time only you will say, I realized my receivables. I realized my receivables. Correct? The truth was what? Receivable was there. Now I converted the truth into actually the fact. I converted it into cash. Am I clear? Yes? Huh. See, accrual is a basis of accounting. How do you account? Realization is just a concept. What they are trying to say in realization is, just don't assume the things and record cash has been received. You record cash has been received only when it is actually realized. Understanding? Don't confuse between accrual and realization. In accrual, what it says is, you record the transaction as and when it is happening, incurred or earned. But realization says, that is second. You have done already the transaction. Now don't assume that cash has been received and record the entry. You record the cash receipt entry only when it has been converted into that form. Understanding, everybody? Yes, that is the meaning of realization. Then, all covered? Matching concept. Now, what is matching concept? The word matching says, simple, sir. Whenever we try to earn any income, my question to you, whenever you try to earn any income, will you earn the income without any expenditure? Sir, I can do, sir. Give me examples. You cannot. For example, sir, after becoming company secretary, what will be my expenditure? Sir, my brain I will use, I will earn the money. Correct? You may say, correct, appa. Where will you sit? Office, sir. Rent who pays? Ayya, you only know. Correct or no? Even though you use your brain, still there is expenditure. Rent is there, electricity is there, Wi-Fi charges are there, laptop which you have purchased is expenses. Of course, it is a capital expenditure, but expenditure is there. Yes, and your softwares which you are using is an expenditure. So always remember, every income you earn will always have a expenses. Sir, Mysore on famous, what is that? Commission agent for land dealings, correct or no? Sir, what are his expenses? You tell me, sir. Correct. You find the buyer, you find the seller, connect them, 2% commission on anything. 1 crore, 2 lakhs, fine. With there, what is the expense? Expense there also it is there. Traveling, meeting, making them sit together, give them free tea, coffee, masala dosa. Correct or no? Sometimes it clicks, sometimes it fails, sometimes negotiation don't go up. Understanding? So everywhere expense is involved. Sir, the rate of expenditure can vary. Andre, so in certain businesses, the expenditure might be 10% of the income. In certain businesses, the expenditure can be 90%. In our profession, like company secretary and chartered accountant, the expenditure will be usually 50%. Understanding, everybody? Yes, because we have profit of 50%. Why? Because our expenditure are only salary, rent, Wi-Fi, electricity. That's it. There is no other expenditure. I don't have to buy goods. I have to sell goods. No. I am using my brain. I am giving the services. Understanding? Yes. Again, accounts, limitation. My brain cannot be converted into balance sheet. Correct or no? Because account says only monetary things. My brain is the biggest thing in our profession because we use our brains to deliver the service. But what to do? We cannot value our brain. Money measurement is not applicable. Yes or no? So that is your matching concept. Then what else? Over? Covered? Next. Next, we will talk about accounting principles. See, these are accounting concepts. These are called as accounting concepts. Sir, in exams, how the question will come? They may ask you directly 4 concepts name and they will ask you to explain. Or they may ask you for 5 marks and say write any 5 accounting concepts. Clear? So whatever you know, you can write. Or they may ask directly, explain accrual concept, explain matching concept, explain periodicity concept and any other concept. Depends. But anything they give, answer remains the same. It is all, remember sir, in all these things, the important part is the keywords. Keywords. What are those keywords, sir? Here, in the first one, separate and distinct from its owner. If you write this, you will get full marks. And always remember, if they ask for 5 marks, 5 questions, 5 concepts, always write the explanation. That means whatever this keyword, then you have to quote one example. Mandatory. Clear? One example is mandatory. Small one. Now don't write paragraph. Small example you can quote. Next, money measurement concept. Only transaction that can be measured in money. These are the keywords. You should remember also this only. You should remember only this much. You don't have to remember the entire summary, entire sentence. No. Don't by heart. Always link it with the examples. If you link, the name itself suggests most of your answer. Clear? Going concern on. Assume that business will continue its operation indefinitely. Indefinitely. Also we can call it as foreseeable future. Foreseeable future. Then accounting periodicity concept. The life of business is continuous, but for reporting it is divided into specific time period, usually 1 year. This is important. Clear? Next, dual aspect concepts. Every transaction has 2 aspects. One debit, one credit. Irade one sentence adralli on 3-4 keywords ashte. Cost concept. Recorded at the price paid to acquire them. Realization concept. Revenue should be recorded only when it is earned and not when cash is received. Clear? Sir, then cash when we should record? When you actually receive. That is what realization concept is all about. In book ಸ್ವಲ್ಪ confusing ಕೊಟ್ಟಿದ್ದಾರೆ, but the fact is realization is nothing but as and when you realize. See, when I sold the goods, I recorded the transaction because I know that revenue is being done. Now when to record cash, sir? When you actually receive. That is your realization concept. Clear? Matching concept. Every revenue will have its own expenses. Expense should be matched with the revenue. Andre revenue ಗೆ ಯಾವಾಗಲೂ expenditure ಇರುತ್ತೆ. Clear? Sir, my one more question to you. I said every income will have expenses, but will every expenditure have income? Will every expenditure have income? If anybody wants to say yes, then my question is simple. Now I started a business tomorrow. I called Shah Rukh Khan to the opening of my shop, and he is my brand ambassador. Now just because Shah Rukh Khan came, people will come to buy from my shop or to watch Shah Rukh Khan. Understand? So whatever money I paid to Shah Rukh Khan, there is no guarantee that customers will come and buy from me. If that is the case, then our famous, correct or no, Vimal, everybody would have taken. Who all is promoting that? Tiger Shroff, Ajay Devgan, Shah Rukh Khan, huh? All. Akshay Kumar. Everybody is promoting. But are we eating? So does it guarantee that everybody will buy it? So advertisement in one such expenditure where it doesn't guarantee you any revenue. Clear? So every income will have an expenses, but every expenses may or may not have income. Accrual concept. Income and expense are recorded as they are earned and income. Earned for income, incurred for expenditure. Okay? Yes? Now, accounting principles, you can write down here only CDCM. CM the CD release agide. Very famous, correct or no? Jarkioli. No, that was the case, but you can connect it. You can remember political, right? Huh? CDCM. Sir, what is CDCM, sir? First C, we'll see what is C. C is nothing but we can say consistency. Consistency. Sir, what is the meaning of consistency? The word itself says consistency on Renapa. Now we say always use. Virat Kohli is such a consistent batsman. That means what? In every match he comes and scores. Right? All the important runs he will score. Of course, here and there he fails. But if you look at 10 matches, he is consistently scoring good amount of runs. Right? Now, how it is related to accounting, sir? How it is related to accounting is simple, sir. There is accounting policies, accounting rules, accounting principles, lot of things, correct or no? Now we discussed about accounting concepts, right? So what this consistency says is, you follow your accounting policies also consistently every year. Sir, andre, that means, say for example, I said depreciation, correct? Everybody knows what is depreciation now. Wear and tear anta helidi. Yes. Now depreciation you understand. Under depreciation, there are different methods of charging the depreciation. There is something called as straight line method. There is something called as written down value method. Don't worry, we will discuss in detail, but just remember the names. So there are SLM also, straight line method also, there is WDV also. You can't say this year I will follow WDV, next year I will follow straight line method, next year again I will follow WDV, next year again I will follow straight line method. Not allowed. This principle says, boss, whatever you want to do, no, you want to do SLM, do it consistently. Be Virat Kohli. Clear? Don't become one match wonder. Regularly follow one thing. No, sir, I have decided all these years I have done SLM, but this year I have decided to shift to WDV, written down value method. Fine. Going forward, keep following written down value. Clear? Now, how, whenever you come to the class, you always come and sit to the same spot, correct or no? Consistently, without fail. If somebody is sitting in your place, you will ensure that she gets up and goes, you will sit there. Correct or no? Like that. Accounting also like that. Consistently, you have to follow all the accounting policies and principles. The objective of this is very simple, sir. Say, let's again come back to you only. I have given 3 exams to you. First exam you gave and you got 30 out of 50. Second exam you skipped. Third exams you got 12 out of 50. Now can I judge you? How? Why? I don't know, because first exams you scored 30, second exam you didn't come only, third exam you scored 12. Now how do you judge? First exam did you copy? Or is it luck? Or you really read that time? If that was the case, you really read, then why did you skip the second exam? Sir, the one person from whom I copied is also absent. I will also absent. Correct or no? You can't make the judgment. But Let's look like this. First exam you scored 30, second exam you scored 35, third exam you scored 35. Now I can say, yes, she is consistently doing good. She needs some more push, maybe. Then she may do wonders. So when you keep scoring the marks in a consistent manner, I can judge you. This is exactly why consistency is needed in the accounting. Why? If you want to judge a company as to how it is performing year on year, you need consistency. Clear? If one, I'll charge depreciation first year, second year I'll not charge depreciation, third I will charge some other way of depreciation, can I judge the company? Answer is no, I cannot judge the company. Can I compare it with your peers? Say for example, she has also written first paper, first time both 30-30. Doubt initiated, copied or not copied. Next exam 35-36. Now little bit, okay, fine, this 35 has come from different answers, that 36 has come from different. Now I feel no, both are performing well, but the person who has scored 36 is performing a little bit better than person who is got 35. Like that, what happens if you follow consistently, you can compare Tata with Maruti. Otherwise, you can't compare Tata with Maruti. Understanding everybody? Yes. So consistency is important. Otherwise, we won't be able to judge. Judge what? Judge past years. Judge with other companies in the same industry. Yeah, everybody is following, no? Yes. Next is conservatism concept. Sorry, we'll go by this, na? CDCM. C is for consistency. D is for disclosure. What? Disclosure. Sir, what is this disclosure concept, sir? The answer is simple, sir. You should disclose all the relevant and material information in the financial statement. All the relevant and material information. Now, did we discuss materiality? Oh, here only. Yeah, yeah.
Accounting financials.
Yeah, yeah.
But you are expecting their accounting principles.
Sorry, come back to principles only. I have it.
But CDCM is for conventions, not for principles. Even for principles.
Oh, sorry. Here. CDCM, my mistake. CDCM. Conservatism, disclosure. Correct? Both are same. Don't worry. It is here written in one line, there it is written, and there instead of full disclosure, they have used full disclosure. That is why that CDCM will not work. Okay? Now come back. Disclosure. Disclosure andre ಏನು sir? You should give all the information regarding all the relevant information and material information to your users. Sir, now what is material? Before we understand disclosure, let's understand material. Now, what is material? You understand very carefully. If some of the information is not being provided to the users, and such information is very important to the users. Such information is very important to the users. Better I'll give one example. Say I will say tomorrow class is there. Okay, let's assume tomorrow class is there. But I will not say which subject. What will you do? You will attend the class, no doubt. But you don't know which subject to bring. Books. Correct? Of course, you can carry all, but I am just saying your books will look this big. Now, one book only to bring, you will cry. Correct or no? Selectively, you will bring the books. That to sharing basis. Today I will bring, tomorrow you bring. Correct? Now, if I don't give you a specific information as to tomorrow which class is there, you may not bring the book only. Correct or no? Or you may bring all the books. Extra efforts are bringing all the books. The more chances of bringing no books is higher than chances of bringing 4 books. Correct? Yes. So here what happened? I gave information, but I didn't give important information. What was the important information? Which class, sir? Correct. If that information was not given to you, did it impact your judgment about tomorrow's class? Correct or no? Did it impact your judgment? How they look, sir? If you would have told me accounts class, no, I would have mentally prepared myself to come for accounts class in the morning itself. I would have at least gone through some of the topics and come back. You didn't tell anything. So I thought first class might be law. I read law. Now you are asking questions of accounts. I don't remember anything. It may happen, no? Correct or no? Short-lived memory. Yes, you will forget whatever has happened yesterday unless and until you go and revise. Correct. So that is how it is. So when I skipped giving you that particular information, was your judgment impacted? Clearly? Yes. Now one more way. The new trend. A girlfriend and boyfriend met somewhere. They said we'll go on a date. Now suddenly boyfriend went to the restaurant. He's waiting. Now suddenly girlfriend comes up with another friend. No material information was given about the other friend. If given, one more friend of his also would have come. Correct or no? Yes or no? Correct, no? If that information was not because that information was not given, now he became misjudged. I mean, he can't judge now what to do. He can't take proper decision. Now he will think in his mind what to do. How should I get rid of her? Correct or no? Yes. So that information, if earlier only was given, see, I will bring my friend also because my parents will not allow me to go out alone. That information was given, I would have also made up the same story. I will bring my friend also because I don't go out without him. Correct? Avarigon table bere, namagon table bere. So materiality is nothing but if any information, if not provided or not given, skipped, omitted or misstated. Skipped, omitted, misstated. Skipped and omitted is same, sir. Skipped and omitted, we are not provided that information at all. Girlfriend, boyfriend example. Misstated means what? Girlfriend said, see, I'll get friend along with me. Okay? Okay, done. Friend along with me. He's mentally prepared now. He has also bought his friend along with me. She bought boy friend. Friend only, but in the form of boy. Misstated. Information was given. But whether that information was correctly used to judge, no. Why? Because information was misstated. Whom you should have bought? She should have told, I am bringing a friend. He is a male. Then I would have also bought a friend, female. Or I would have cancelled only. Correct or no? Now this information was not given. Now what I thought, friend is coming, no? I will also take my friend. Right. There they will mingle up and they will go separate ways, we will go separate ways. But here it looks something else. Now both yum, correct, male. What they will do? Correct. Now what we will do? We both yum will go separate ways, they will go separate ways. So here the information was given, but it was misstated. Understanding? Misstated is nothing but giving information in a wrong manner or a wrong information. Clear? So materiality means any information which is omitted or misstated, which can impact the users of the financial statements to take any decisions. Any financial information which is not provided to the users, which is important to take the decision. In short, in layman language. Any information which is important and that important information was not provided to the users of that information, then it is called as materially omitted. Yeah, understanding or no? So now technically speaking, materiality is nothing but if any information is omitted or misstated which can impact the decisions of users of such information. Now remember, now imagine balance sheet and P&L of Reliance. Now Reliance, say for example in Reliance Petroleum, there has been a huge leakage of the refinery. They have not told this information in the financial statement. Now what you will do as a users of the financial statement, you will see refinery business is doing great. So you will put in the money. But is it correct? No. Information was what? Refinery was doing great till now, but suddenly entire refinery is gone. That information should have been given. If that information was given, what you would have done? No. Of course, refinery is doing good, but now they are going under losses because the leakage is started. So let's wait for some more time. You would have not invested in the company. Because that information was omitted, your decision went wrong. So materiality is not any information if misstated or omitted, which is important for the users to take the decision. Clear? And materiality, one more thing you should remember, materiality is a subjective matter. It is a subjective matter. What is the meaning of subjective, sir? A materiality for me may not be the same materiality for you. Sir, artha aglilla. For me, while going to my office, if I lose 1000 rupees, it doesn't bother me. I won't spend time more than 5 to 10 minutes in finding that 1000 rupees. But for you, if that 1000 rupees is lost somewhere while traveling, will you not get panic attack? Correct or no? Yes or no? Same, 1000 rupees was same, no? For you also 1000, for me also 1000. But for me, 1000 rupees was not that material, but for you, 1000 rupees was material. Because it is important information for you. Correct or no? It is important, 1000 rupees. ನಿಮ್ಮ ಮನೇಲಿ ಗೊತ್ತಾದ್ರೆ 1000 rupees ಕಳ್ಕೊಂಬಂದಿದೆ ಅಂದ್ರೆ ಎಸ್ ಆರ್ ನೋ ನಡೀತಮ್ಮ ರೈಟ್ ಎಸ್ ಫಾರ್ ಮೀ ನೋಬಡಿ ಇಸ್ ಗೋಯಿಂಗ್ ಟು ಆಸ್ಕ್ ನೋ 1000 rupees ನಾನು ಕತ್ತೆ ದುಡ್ದಂಗೆ ದುಡ್ದಿರೋದು ನಾನು ಕಳ್ಕೊಂಡಿರೋದು who has to answer? Myself. Correct? So that changes. So what is material for me may not be material for you. What is material for you may not be material for me. Clear? But for me, if I lose 50,000 rupees, I will get panic attack. Correct? But what if Ambani loses 50,000? Yeah, yellow tips kotirbeku. Let's move. Understanding? Ambani materiality is different. My materiality is different. Ambani materiality may be in crores. My materiality is just in thousands. Clear or no? Yes? So, now coming back to disclosure. Now, we understood materiality, we understood consistency. Now we are coming back to disclosure. Disclosure means what? You have to disclose all the relevant and material information. So that means what? Now example of Reliance. That refinery being leaked should have been reported. It is an important information. Was it a material information? Yes. So disclosure concept says, boss, disclose everything you know. Just don't hide any information. That is what disclosure says. Clear? So all the relevant information. Say for example, when I am preparing my balance sheet, 1000 rupees lost, I will still write 1000 rupees lost. Whether it has materially impacted me or no, but information is important. 1000 rupees I will write. If it is material, definitely write it. If it is material, 1000 rupees you lost in your balance sheet, please write it 1000 rupees lost, because it is material for me, for you, not material for me. Clear? Everybody is understanding? So disclosure means give all the necessary and important information without miss. So that is why disclosure and materiality are interlinked. Clear? Any information which is material and not disclosed, then disclosure will come and say disclose it. Clear? Understanding? Next is conservatism. Conservatism. Now we use this word also. No, our family is very conservative. Their family is very conservative. I don't like going to their house. Correct or no? Especially girls use it more often than not. Correct? When it comes to your way of dressing. No, my family won't allow this because we are very conservative. Correct or no? So what is conservative? Same way in accounting there is something called as conservatism. What is the conservatism concept, sir? Simple. What accounting says is, anticipate all the losses and record it, but don't anticipate the income. Similar, why I took example of girls? Simple. Before you buy the dress, you anticipate all the comments. Correct or no? Getting from your family. Yes or no? Huh? No. My father will definitely not approve this. Next, my mother will kick me out of the house itself. Correct? She will say, no, she is not my daughter. You anticipate all the comments like that, sir. Your conservatism in accounts is anticipate all the losses, but don't anticipate any income. Sir, how do we understand this in terms of accounting? I'll give you one example, sir. My classic example is simple. Say you got a contract of constructing flyover, our Columbia flyover, Bangalore Mysore highway to Mysore, now fully cluttered, correct or no? Now you quoted 700 crores to construct it to the government. The government is approved your contract. Now you know my cost is only 600, 100 crore profit. Then I will be duddu, correct or no? Dabbe dabbu. What happened? Started constructing. 600 crores in mind, 100 crore profit, full Josh, constructing. You have to go deeper. Say, by example, you have to go 50 feet deep. You went 20 feet, one huge boulder stone you got. The moment you get boulder stone, whatever area you are going to drill, no, you can't drill only that area. That entire boulder stone only would have to be taken out. How do you take out? You can't drill it. You have to blast it. Correct? You have to use all the blasting material. You have to call the particular expertise into that field to blast it. You must have heard in the news, no, quarry blasting, that and all. So you have to call the people expertise. They have to blast. You can't use illegal methods to blast. Why? City starting point only. Something goes wrong, I am dead. Correct? In Chikbalapura and all, recently, like 2-3 years back, that quarry blasting people have died. Right? You must have read the news. Gelatin use was done in a wrong manner. All those things. But here you can't do it. Now suddenly, from 100 crore profit, your profit came down to 50 crore. Why? Extra expenditure. You have to dig, say for example, 15 pits. First pit only shock. Then remaining 14 pits, already tension started. Correct or no? So now, you surely know that we are going to get boulder stones in remaining pits also. Correct or no? Now you have to imagine, now from 700 crore, you estimated a cost of 600 crore. Now suddenly that 600 crore has gone to 800 crore. Now 100 crore loss or profit? Anticipate it, record it. 100 crore loss from this contract. Whatever 100 crore you imagined, ulta 100 crore happened. So you anticipated the loss, you record the loss. Sir, ulta sir. Sir, 700 crore sanctioned. 600 crore is the cost. 100 crore profit I know. Can I record it now only? No. Record it as and when you earn it. Clear? Accrual concept. So any losses should be recorded, which is anticipated. Don't think that before even drilling you understood there is boulder stone, I will record loss. No. Anticipation comes with certain events. Clear? I anticipate my loss because I got the boulder stone. If there was no boulder stone, I could have not recorded the loss. Everybody is understanding, no? Yes. So anticipation is not something which you sit somewhere and see, okay, I anticipate 1000 crore profit, 1000 crore loss. No. You anticipate depending upon the events and circumstances. Clear? Everybody is understanding? Yes. So that is your CD CM. So if they give an exam, write what are accounting conventions or what are accounting principles. Remember CD CM. Clear? This is the same principles and conversations. ಇದನ್ನೇ ಅವರು ಸ್ವಲ್ಪ ಡೀಟೇಲ್ ಆಗಿ ಎಕ್ಸ್ಪ್ಲೇನ್ ಮಾಡಿದ್ದಾರೆ. Here also if you look at very carefully, they use one keyword. Once business adopts accounting method, it should use the same method every year. That is the keyword. Here, anticipate no profits but provide for all possible losses. So no loss, no profit can be anticipated, but if any losses are there, please account it or provide for those losses. Am I clear? Full disclosure principle, all material and relevant information must be disclosed in the financial statements. Information that is significant and influences the decision making needs detailed recording and disclosure. I told you, no? Materiality is nothing but any information which will impact the users of that information. Clear? Next, there is one more objectivity principle. Objectivity principle is nothing but objectivity. The word itself is nothing but goal. What is the goal of these principles? What is the goal of the principle? Objectivity principle means what is the goal? It is simple, sir. What is the objectivity behind you recording the transactions? See, the first objective is you want to record all the transactions, correct? Sir, okay, I want to record all the transactions. Can I record however I want? No. You have to record using the reliable sources. Clear? You have to record the transaction using reliable sources. Then, what is reliable sources, sir? The information from where you are going to get, I mean, you are recording, right? It should not be somebody who is not trustworthy. Clear? He should also know what he is doing. His method should be correct. Based on accuracy of his methods, you will decide whether to rely on that information or not. If his methods are inaccurate, you can't rely on that information. Clear? For example, what can I give? Say some news have already broken in rumor form in your college, suppose. Yes. Say your best friend has got something, has done something, whatever has happened, but you have not seen your best friend yet, but the information is already circulating in the college. Now when it comes to your ears, will you straight away trust that information, or will you say, no, I will ask this to my friend only? Why? Because he is my reliable source, I can trust him. So you went and straight away asked from that person only. So reliability means that. So whenever I am doing accounting, say for example, there is something called as gratuity. What? Gratuity. Gratuity is nothing but when an employee works for certain years, say 5 years in your company, the company in return of that in return of whatever service he has given, they want to express the gratitude. To express that gratitude, they give something called as gratuity in terms of money. Clear? So when you join my company, first year is over, second year running. Now I will assume that you will continue for 5 years and I will create a provision for gratuity. Now, how will I create that provision, sir? I don't know. Then how to create, sir? I go to a person called as actuary. Who? Actuary. Just like how company secretaries and chartered accountants are there, like that actuary is a profession. Clear? So we go to actuary. Actuary will, using his methods and techniques, he will find out how much provision should be made for that particular employee for gratuity. Clear? So now, while preparing the books of account, I need to record gratuity na. Can I record it how much ever I want? No. I will go to a reliable person. Who is reliable person? Actuary. That actuary, how we can call him as reliable? Because the system or the methods or the techniques which he use is the method which I can trust upon, I can rely upon. Based on that only, I can record that particular information. Clear? So you can record all the transaction, but those transactions should be verifiable and it should be reliable and free from any personal judgment. Sir, what do you mean by this free from any personal judgment? Simple, sir. Just like how when you meet any person for the first time, when you look at him, you judge. Correct or no? You judge. So like that in accounts, what happens is, say for example, I am a HR. I hate her. She has joined, now she has completed 2 years. Because I hate her, I will say I will not give gratuity because I know she will leave the company. But the reality is she will not leave the company. She wants to with this company for next 6-7 years. Now, my HR as a HR, am I not using my personal bias towards her? This personal bias should not be reflected in the books of accounts. Judgment, sir, accounting is not accurate. Accounting is not accurate. That is why we use the word true and fair. We never use the word true and accurate. But when we can say it is free, when we can say it is fair, only when there is no personal bias. Sir, that means there should not be judgment at all. Judgments are needed, sir. But those judgments should be in a professional manner, not in the personal manner. Clear? Accountingly, professional judgment is involved, sir. But we use the word professional. Professional means what? Actuary, chartered accountant, company secretary. Those are legal advisor. They are all professionals. They can give the judgment. Why? Because they look from the angle of professionals. But if accountant is hating somebody, that is why he want to don't make any provision towards him. That is not a professional judgment. That becomes our personal judgment and personal bias. That should not be used. Clear? Everybody is following me? Yes? Am I clear? Okay. Next, fundamental accounting assumption. The shortcut, remember, Goa. Consistently Goa planning. Correct or no? We'll never go, but we'll plan consistently. Correct? Every year we'll plan to go to Goa, but every year we don't go. Happens, huh? Huh? I don't know about girls, boys antu fix. Whenever we get free times, let's go to Goa. Next month, pakka. All planning, everything done. Next month when it comes, no? Correct or no? So consistently Goa planning. Correct? So now consistently already is a accounting assumption. So, sir, now first before we understand what is accounting assumption. Accounting assumption is simple, sir. Whenever financial statements are prepared, whenever balance sheet and P&L is prepared, we will always assume that these three things are followed. Whenever we prepare financial statement or whenever we read a financial statement, we will always assume that these three things are followed. What are those three things? Consistency, going concern, accrual. Consistently Goa planning. Consistency, going concern, accrual. GO is going concern, A is accrual. Sir, what is the meaning of this? The meaning already explained. Concepts are explained. You know accrual, you know going concern, you know consistency. So when you prepare the financial statement and give it to me to read, I will assume that you are following these three things. What do you mean by you are following these three things? What do you mean by following is simple, sir, that your company is going to continue for further future, for foreseeable future. That is one assumption. The second assumption is that you are preparing your books of accounts based on accrual system. You are not waiting till cash payment or cash receipt. The third assumption which I am going to make is you are following your accounting policies and procedures consistently over the years. Understanding? So I will assume that all these three things are true. Sir, what if we don't follow? If you don't follow, then you need to tell in the financial statements very clearly that we are not following going concern, or we are not following consistency, or we are not following accrual. So understand why the word assumption is important. Assumption is what we will assume that you are definitely following this. If you follow this, we are already assuming that you are following. That means there is no requirement of disclosure that we are following this anta ನೀವು ಬರೆಯೋದು ಬೇಕಾಗಿಲ್ಲ, because we will assume that you are following. What you are following? Consistently Goa planning. Correct? We will assume that you are following this in your life. Correct? You have to disclose it only when you are not following. Here. So if you don't follow this, not following, please disclose. Following, do nothing. 5 star. Correct or no? If you are following these three assumptions in your preparation of financial statement, do nothing. Eat 5 star. Correct? If you are not following, then you have to disclose. Clear? Everybody understood? Sir, what about other concepts? Say I am not following cost concept. Disclose it. Sir, I am following cost concept. Disclose it. ಎರಡು ಸೈಡ್ ಡಿಸ್ಕ್ಲೋಸ್ ಅರ್ಥಾಗ್ತದಿಲ್ಲಪ್ಪ. Sir, I am following money measurement concept. Disclose it. I am not following. Disclose it. Sir, I am following business entity concept. Disclose it. Not following. Disclose it. Illi following, not required to disclose. Not following, disclose it. Everybody is understanding? Yes? Next, financial statements. We already discussed what are the part of financial statements, appa? First class, second class, remember? Balance sheet, P&L, cash flow statement. One more thing was Notes to. Sir, what is this notes to accounts now? Whatever we discussed now, sir, concepts, disclose it, not disclose it, disclose it, not disclose it, those things will come in notes to accounts. Clear or not? Sir, we are following historical cost, disclosed in notes to accounts. Sir, we are following materiality, disclosure will come in notes to accounts. Yeah, sir, we are following historical cost, notes to accounts. Sir, we are following consistency, not coming anywhere. Why? Assumption. Going concern, will it come in notes to account? No. Why? Assumption. Accrual, will it come in notes to account? No. Why? Assumption. What else will come then? Disclosure concept. You can write. We have disclosed all the relevant information. What other concepts we discussed upon? Dual aspect concept. You can write. Huh? Business entity. You can write. Clear? So balance sheet is for what, apa? Financial position. Why it is called financial position? Because we show all the assets, and P&L is called as financial. Why performance? Because income and expenses is shown in the P&L. Marks card. Correct or no? Cash flow statement is nothing but captures cash movement. Now, cash flow statement is prepared based on cash system. Correct or no? Why? Because you are capturing the actual cash movement. Cash flow statement. The name itself says how cash is flowing. Cash is coming in, cash is going out. We'll capture that. Clear? Everybody? Yes? Now, qualitative characteristics of financial statements. Because you have to tell them, no, sir, what concept you offer. For example, you are saying, I am following historical cost method. Huh? For preparing books of accounts. Sir, this concept whichever we have discussed, it is used where? Used where? Books of accounts, no. While we prepare financial statement. Now, this notes to accounts is given to tell that we are following historical cost of accounting. The plant and machinery is recorded at historical cost, and we are charging depreciation using straight line method. Sir, financial statement start with balance sheet, then comes your P&L, then comes your cash flow statement, then comes your notes to accounts. So notes to accounts will cover your all the explanation. Has to say, now just now I gave you example, historical cost. We record all our fixed assets using historical cost, full stop. We charge depreciation based on straight line method. This is how you prepare in notes to accounts. Understanding? Everybody? Yes? Now what if you want one more example, what I can give? One more example, what I can give? Going concern, of course, is assumption, but leave apart going concern. If you want to give gratuity, clear? We have provided gratuity based upon the certification or report of actuary. You can disclose it in the notes to accounts. Clear? Yes? Yeah, explanation is, sir. Now, whatever concepts we have read is nothing but explanation of how accounting is done. No? The same thing will be given in notes to accounts. Clear? Because see, you are a company secretary, I am a chartered accountant. I know to read the financial statement. What about the investors? They will have to understand, no, how fixed assets are being arrived at. They will look at notes to accounts. Clear? They will understand how you are treating every item in your financial statement. Say you are giving gratuity. Say there is something called as warranty provision. You know, when we purchase any asset, there is a warranty. So what is the warranty? In next 2 years, if something happens, you can go back to them and they will replace it. Correct? That is warranty. Now, when I sell the particular, say for example, this tab has a warranty. When I purchase, say when I sell the tab, I sell it for 40,000. Do you think I give warranty for free? Do you think any company gives warranty for free? Nobody gives warranty for free. In that 40,000, I already included 5 to 6,000 towards warranty. Clear? Now, in my notes to account, I will explain how much percentage warranty is being, how the warranty is being computed. I mean, how we are pricing the warranty, and what is my estimation of warranty claims being made by the customers. Not everything comes for claim, correct or no? Say for example, we all have purchased phone. Have we all gone towards warranty? Everybody gave 2 years warranty, no? Or 1 year warranty. Has everybody gone to claim warranty? No. There is a professional judgment involved. Based upon our industry trend, based upon our product quality, we will make certain calculations, professional judgment, and decide out of 100 products sold, 30% will come for warranty claim. We'll make a provision for 30% of warranty cost. Understanding, everybody? Yes. So this calculation and this judgment, somebody has to explain, no? If I don't explain, I'll say warranty cost is this much, warranty price is this much. You will understand that?
Balance sheet, all liabilities and balance sheet, income and cash flow statement. How do we record like notes?
What to record? Notes?
The explanation of this.
They'll give in paragraph, sir. That is what I'm saying. I'll explain. We have sold so many units in this year based upon our past trend. This is our, say for example, 30% goods come back. All those things, blah, blah, blah. Then they will give a small table where they will explain the calculation, how it has been arrived there. So they will explain in words. That is what I am telling you, full disclosure standards, sir. Disclose everything, all the factor and information. Say now Reliance petroleum leakage. Where will I write it? I'll write it in the notes to accounts. That this particular plant has been disclosed. Say there has been income tax raid. Where will I disclose it? I'll disclose in my notes to accounts. That income tax raid has happened on so and so date. Understanding? So notes to account is explanatory, sir. It is given in paragraph. At the same time, some tables will also be given for calculation purpose. Clear? Don't worry. Tomorrow I'll show you one financial statement. That time you'll understand better. Okay. Now coming to qualitative characteristics of financial statements. Now what are the characteristics of financial statement? One is understandability. The first concept is understandability. Sir, what is the meaning of understandability? See, your financial statement is basically the financial statement is prepared for whom, sir? For users. For what we are providing to them? To understand how the business is going on. Correct or no? So your financial statement should be understandable. Understanding. Sir, financial statement is prepared for whom, sir? For users, sir. For what, sir? To take the decision, sir. Correct? Everybody is understanding? Yes, sir. They take decisions on what, sir? On based upon the financial statement. So they have to first understand the financial statement, sir. To understand the financial statement, your financial statement should be understandable first. If you prepare however you want to prepare financial statement, will they be able to understand? First quality or first character is prepare financial statement in such a way that it should be understandable. You should write exam with a handwriting which can be understandable, not in a way which only you can read in the world. Evaluator should also be able to read it. Hange, financial statement should be able to prepare, should be prepared in a manner in which it can be understood. So if you write however you want, people may not understand. Clear? Everybody? Yes? Next, relevance. All the information which is relevant should be considered while preparing the financial statement. So relevant is, one more word is important. Again, when we use the word important, material automatically comes. All the information which is relevant and material which will impact the users of the financial statement should be included in the financial statement. All the important and material information which will impact the users of the financial statement should be included in the financial statement, and that is one of the characteristics of the financial statement. Clear? So understandability, relevant. Next is reliability. Financial statement should be prepared from reliable sources. Now, who are reliable sources? based upon reliable sources is nothing but the source which you can trust upon, the methods which you can trust upon, not somebody who will come and simply use his personal bias. No, his method should be correct, or the information should be correct, or the calculation should be correct, or there should be some science behind the figures. Understanding? So in other words, that information should be verifiable. If I use my personal bias, can I verify that information? No. Whereas if I use a system to calculate a figure, can I verify that? Yes. You can go through and read how that system functions. Clear or not? Yes. Now, system doesn't mean that only computer system. A system, for every process we call system. Okay. Comparability. One more important character of financial statement is comparability. Sir, last year igu, year igu compare madak barbek. Clear? Sir, this year I am showing sales. Next year I will not show sales. This year I will show sales. Next year I don't want to show sales. Can I do that? Here is the comparability. Understanding, everybody? Why comparability is needed? I already told you. To judge how the company is performing year on year, or how the company is performing when compared to the similar company in the same industry, like Tata, Maruti, Toyota, whatever you take. Now you can't compare Tata with TCS. Why? TCS is a software company, Tata is a automobile company. But you can compare automobile with automobile, that should be there. So your financial statement should be comparable. So what are the important characters till now we have discussed? Understandable, relevance, reliable, comparable. Clear? So if you read it, here also the words are very allu nodi, one line explanation. Example is the key. So if they ask you, the question will come. Explain the characteristics of financial statement, or explain the qualitative characteristics required in the financial statement. Question may come anyway. Or features of a good financial statement. What? Features of a good financial statement. Features. FEA, not FUTU. Clear? So first one, understandability. Financial information should be presented in a simple, clear and structured manner, so that so that even users without deep accounting knowledge should be able to interpret it, or should be able to understand it. Clear? This is where notes documents comes into picture, sir. Those who doesn't have accounting knowledge also should understand it, no? That is why we give notes document. So in simple terms, financial statement should be presented in a simple manner which could be understood by a person who may not have accounting knowledge also. That is how you should write your answers. One example you should put. Example also they are given. Okay. Yes. Next, relevance. Information which is relevant if it helps users in making economic decision, such as investing, lending, or managing resources. Clear? Such information should also be disclosed. So irrelevant, outdated information can mislead and must be avoided. So what they are telling is, any relevant information is there, you please provide it, so that users can make a proper decision. Clear? So relevant is what? Again, it comes back to important and material information. Reliability. So information should be accurate, verifiable, unbiased, and based on documentary evidence. I told you systems should be there where you can go and verify the system. Personal bias should not be used. Comparability. Financial statement should be prepared in such a way that the results can be compared over the years across companies. Over the years means 25-26 or 26-27. Companies means Tata, Maruti, or TCS, Infosys, or Wipro. Yes, everybody is following me. Any doubts in this? No doubts? Now, accounting policies is nothing but, sir, whatever we have gone through now. Accounting concepts, accounting principles, accounting assumption, accounting conventions, all this put together along with your accounting practices, all this put together is called as accounting policies. Clear? Just like how creditors, shareholders, lenders, all put together we can call stakeholders. Like that, if you put all this together, it is called as accounting policies. Clear? Now, how do you select an accounting policy? The answer is simple. You select an accounting policy which is actually correct to your entity and which will ultimately help in preparing the financial statements in a true and fair manner. Sir, one example I will give you so that you will understand better. I have purchased a plant and machinery. Okay. Now, there are two methods of depreciation. One is SLM, one is WDV. One is SLM, one is WDV. What exactly SLM, what exactly WDV? Let's not bother. I'll just explain you briefly as to how SLM works, how WDV works. SLM is where every year fixed percentage of depreciation is given on the cost. On the cost. So, for example, if 1 lakh is the asset, so 10% of it, 10,000 first year, second year also 10,000, third year also 10,000, fourth year also 10,000. So, depreciation is 10, 10, 10, 10, 10. This is straight line method. Under WDV, what happens is 1 lakh into 10% will give you 10,000. So, first year depreciation is 10,000. Second year, it will not be 10,000. What it will happen is, first year, what was the cost? 1 lakh. 1 lakh. What was the depreciation? 10,000. What is remaining? 90,000. Now, in WDV, 90,000 will be used for charging the depreciation. So, that will be 9,000. Third year, 80,000. 81, sorry. 8,100. Here, this is WDV. Look carefully. Here, every year 10, 10, 10. Here, 10,000, 9,000, 8,100. Next year, it will come down again. Clear? Now, I will tell you how accounting policies influences. Now, I have taken a machinery. That machinery can be used for 10 years. And every year, it can produce 1 lakh units. Every year, 1 lakh units. Which method of depreciation is suited for me? You understood my question, no? I have a plant and machinery. Every year it can produce 1 lakh units. And it can manufacture 1 lakh units every year for 10 years. Now, for that machinery, which style of depreciation is suitable? Straight line method or WDV? Na? Straight line is suitable. Why? Sir, it is giving output equally every year. Correct? So, depreciation should also be charged equally every year. Correct or no? Is there any change in the years? No. Every year 1 lakh unit is being produced. So that means depreciation also we can say we can charge 10,000 every year. Now if I change the question, sir, first year it gives 1 lakh, second year 9 lakh, third year 8 lakh, first year 1 lakh units, second year 90,000 units, third year 80, fourth year 70, fifth year 60. So here if you look carefully, the machinery is producing the maximum benefit in the first year. So, look very carefully. The machinery is producing the maximum benefit in the first year. That means the maximum wear and tear also happens in the first year. So, my first year depreciation should be higher than next year's. Correct or no? The wear and tear in the first year is higher when compared to the wear and tear in the second year. In fact, you can say like this. The output in the first year is higher than the output in the second year. So, can I charge depreciation higher in the first year, lower in the second year, further lower in the third year, further lower in the fourth year? Why? Because the pattern of usage of the machinery changes like that. I use the maximum in the first year. So, my cost should also be depreciated maximum in the first year. Correct or no? So, for this, can I use WDV? Understanding? Yeah, are you getting it or no? If every year I am producing the same units, then it means every year I am using in the same manner. First year I ಜಾಸ್ತಿ use ಮಾಡಿ wear and tear ಜಾಸ್ತಿ ಆಗಿದೆ, second year wear and tear ಕಡಿಮೆ ಆಗಿದೆ. No, I am using in the standard manner. Every year 10,000, 10,000, 1 lakh units, 1 lakh units, 1 lakh units, 1 lakh units, 1 lakh units. So every year I can charge 10,000 as my depreciation. Why? Because there is no change in the output. So wear and tear also there is no change. Wear and tear will be in a same manner, symmetrical manner. Correct or no? Every year wear and tear will also happen in the same manner. Correct? Whereas in case of second example, where first year was my output was higher, second year my output was little bit lower, third year further lower. Here my machinery is being used every year, but the thing is output is changing. If output is changing, wear and tear will also change. Clear, everybody understanding? So this is how select in case of first example, if I select WDV, will it give true and fair? It will not give, correct? But if I select the first case, it will give true and fair. Understanding? So your accounting policy should be selected in a manner which gives true and fair. Clear, everybody? Next, you should follow conservatism. That is prudence. One more name is what? Prudence. Don't anticipate any profits, but recognize all the anticipated, or not use the word anticipate, you can use the word possible losses. All the possible losses. So what is the meaning of possible? 50% chance idre recorded. Clear? Ensure materiality. Materiality is required. That means you have to record all the transactions which are material. Promote consistency. Clear? So your financial statement, Andre, they are telling how accounting policy should be selected, which actually gives you true and fair view, which follows prudence, which follows materiality, which ensures consistency, and which also helps you in complying laws and standards. Clear? Everybody is understanding? Sir, you just told we have to follow consistency. Then what again you are using promote consistency? See, accounting policies covers accounting standard also. Understanding which accounting standard you need to use, you should keep in mind that it should be followed consistently. Everybody is following, right? Yeah. Now, can we change accounting policies? Yes, we can change accounting policies, but under three circumstances. One, as required by the law or as required by the standard. Which standard? Accounting standard. Okay, you can change accounting policies if it is required by the law or standard. Or one more is better presentation of financial statement. Sir, adhe tane first na heliddu. Your accounting policy should give you true and fair view. If it is not giving true and fair, change the accounting policy. Clear? So first one is what? As required by the law or our standards. Second condition, better presentation of the financial statement. Third one, same thing, sir. Second and third are integrated points, you can say. Third point says simple, sir. If any accounting policy is change required and it is better based upon the practices adopted in the industry. Say for example, Tata, Maruti and Honda is following particular accounting policy. Correct? Yes. But Toyota or Hyundai says we are not following. Now, can Toyota and Hyundai change that accounting policy to fall under the same category? Yes. Understanding? For better, based upon the practices, we can change the accounting policy. Again, why we have to change? For better presentation only. That is why second and third point are interlinked. Clear? For compliance with industry practice. If you comply with industry practice, it will automatically make your financial statement better. To compare, correct? Or otherwise I can't compare Hyundai with Tata because Tata is following, Hyundai is not following. I can compare Tata with Maruti because both are following. Clear? Everybody is understanding? Yes. Now one more question, very important here. Sir, accounting standard is telling to follow this. Law is telling to follow this. Which one you will follow? Always remember, follow what law is telling. Law will always override accounting standard. Law will always override accounting standard. Law is the supreme. If law says don't follow WDV basis of depreciation, but accounting standard says you can follow both. You can follow SLM also, you can follow WDV also. Which one will you follow? Law. Clear? Yes. Sir, what if accounting policies are changed? What will happen? Correct. So last year I was following an accounting policy. This year I am following a different accounting policy. What will happen? Whenever you change an accounting policy, there is a requirement of restatement of financial statement. Sir, what is the meaning of restatement, sir? Sir, last year I followed a particular accounting policy A. This year I am following a particular accounting policy B. Now A was changed in the current year. So this is, let's say, year 25-26. This is year 24-25. Clear? So here I change this accounting policy. Now what you need to do is, not only 25-26 will get impacted, you need to go back to 24-25, prepare the financial statements again of 24-25 based upon B. You, while preparing 24-25 financial statement, you followed accounting policy A. Correct? Everybody. But in 25-26, you changed from A to B. Now, can you compare your 25-26 financial statement with 24-25? No. Why? Consistency is not there. You only told no consistency is required. Accounting policy is changed. There is no consistency. So how to correct it? How to correct is simple. Go back to previous year, change the accounting policy of that year, prepare the financial statements again. So that is method, that concept or process is called as restatement of financial statement. That means financial statements were already stated. Now again you are restating. Clear? Everybody is understanding. Already financial statement was prepared in 24-25, correct or no? Now we are going back and preparing again based upon the new accounting policy. Not understanding. Understanding, everybody? Okay, any doubts in this? So when we can change the accounting policy? Law, standard, better presentation, industry practice. Clear? Yes. Now let's discuss one definition before we go further. Asset. Can anybody tell me what is asset? Plant and machinery is an asset, sir. Computer is an asset, sir. Those are examples of asset. Yeah, right. So asset, plant and machinery is an example. Laptop is an example. I am telling what is asset. Define asset. Inflow, correct. Asset is nothing but resource controlled by the entity. Controlled by the entity from which future asset is a resource controlled by the entity from which expected future economic benefit inflow. Clear? So what is the meaning of this, sir? Now let's take, sir, why we are using the word controlled and not owned? Yes. Now, asset is a resource controlled by the entity from which future economic benefit inflow is expected. Sir, now you told me this definition. Now make me understand. Correct or no? All technical words. Let's give an example. Now, why the word controlled is coming into picture and why it is not owned, I will come to that step later. But first, we'll try to fit in this definition into your mind. Correct? Now, let's take an example of laptop. Correct? So you have a company, you have a laptop which you are using for billing. Now my question to you, is laptop a resource to you? Resource andre gottallappa ellaru? Everybody knows resource. So laptop, is it a resource to you? Correct. That means which you can use. Correct. Is it a resource? Yes. Is it controlled by you? Control means what? You can take out, you can throw it, you can keep it in the cupboard, you can use it, you can not use it, you can install a software, you can uninstall a software. Correct. Is it controlled by you? Yes sir, it is controlled by me. Okay. Using this laptop, will you be able to generate any revenue? How? Sir, whenever I sell, I enter sales bill here. By that I get the sales bill. After giving him the sales bill, I can I can give the goods to him. Correct or no? So by using the laptop, I can generate revenue. Yes or no? It helps me in generating the revenue. It is not a sole driver of revenue. I am not using the word. It is the only thing that will generate revenue. I am not using that word. But I am all using is, will it help in generating the revenue? Yes or no? Yes. Now you read the definition carefully. Laptop is a resource controlled by the entity from which future economic benefit inflow is expected. How sir? What is this now? When sale happens, you raise the bill, that bill is given. Based upon the bill only, the customer will make the payment. Correct or no? So, future economic benefit inflow is expected. So, that means what? By using this laptop, I can get some economic benefit. Correct or no? Everybody is following? Yes? That means I generate the bill, I take the money. Now, let's take example of land. Land is a resource controlled by the entity. Correct? Now, how future economic benefit inflow will come, sir? Simple, sir. By using the land, you will either manufacture goods on that land, or you rent that land. Correct or no? Or you construct the building on that land and use it as office space. By using that office space on that land, are you able to provide services? Correct or no? So, economic benefit is coming. Everybody, is economic benefit getting reflected to us or not? Everybody is understanding. Take anything, sir. Sir, asset will get qualified. Let's take example of bank balance. How bank balance becomes asset, sir? Correct? Let's see. Is it a resource controlled by us, sir? No, sir. It is controlled by bank, sir. No, sir. It is controlled by you. You can decide whether the bank balance can go up or come down. Correct or no? If you make payment out of it, it will come down. If you receive money inside, it will go up. Correct or no? So it is a resource controlled by you. Yes? Yes, sir. From which future economic benefit inflow is expected. Sir, how future economic benefit inflow is expected, sir? You can either draw cash or you can purchase goods by paying the money. Economic benefit is coming. Correct or no? Everybody is understanding? Yes. So, bank. Now, let's say debtors. Who are debtors? The persons to whom we have sold the goods on credit. Now, whether debtor definition fits in this asset definition, let's see. It is a resource controlled by the entity. Sir, I don't control debtor. I am not asking you to control him personally. But can you control the balance of that debtor? If you want, you can collect it. If you don't want, you can't. You don't have to collect it. Who is having that control? If he comes to pay you also, you can say, no, no, don't come today. I will not collect it. Can you say like that? Yes. Nim money appa, neevu enaru madkobodu. Yes or no? It's your money. If he comes to pay also, you can say, no, I will not take it today. I will take after few days. I am not in town. Is it a resource controlled by you? Yes. From which future economic benefit is expected? Yes. Whenever you want, he will come and give in cash. That cash itself is economic benefit. Correct or no? Hello? Is everybody understanding? Yes. Now, why we use the word controlled and not owned? Can we just use the word owned? No. You owned can be used as optional word. Controlled is the important word. Sir, why? Let's take example of a building which you have taken lease for next 20 years. Clear? You have taken lease of a building for next 20 years. Now, My question to you, for that 20 years, you are making all the payment now only in advance. Lease. Say for example, you are paying 2 crores. Correct? Yes, everybody is following me. If this controlled world was not there and owned world was there, what you would have shown this? Building is with you for 20 years. Are you owner of the property? No. Then how will you recognize this in the balance sheet? You understood my question, no? I got the building for 20-year lease by paying 2 crore rupees. Correct? Now, how to show this 2 crores in the balance sheet? Is it my asset? If controlled world was not there, if owned world was there, can I show it as an asset? Are you owning the building? No. Then how will you show it as asset? Is everybody following me? If I would have used the word owned, then where will you show it? Sir, I will show it as loans and advances. Loans and advances is also an asset, sir. Again, asset definition come back. Are you owning that loans and advances? No. So what you will show? That is why they use the word controlled instead of owned. Now, when I say this 2 crores, now if you fit this definition, it gets fit. Now, where we will show it, sir? We will show it in the asset side. What we will show it, sir? We will show it as leasehold property, 2 crores. We will show it as leasehold property, 2 crores. Why? Because asset definition gets fulfilled. It is controlled by the entity, not requirement to own it. Clear? Everybody is following me? Yes? Next, asset understood? Everybody? Now let's come back to liability. Now let's come to liability. So liability meaning what? It is an obligation arising from past events on settlement of which future economic benefit outflow is expected. Sir, help me understand the definition. Now, when I purchased goods from Mr. A on credit, I purchased goods from Mr. A on credit. The moment I purchase the goods from Mr. A on credit, am I not liable to pay him? Do I not owe him the money? Correct or no? The moment I accept those goods, it means what? I need to pay the money to him. So obligation is coming up. Obligation, why it is coming? Past event. What was the past event? I purchased the goods. Correct or no? If I would have not purchased the goods, obligation would have never come. I purchased the goods on credit, obligation came. What is the obligation? I need to pay him. Now, when I decide to pay him, that is nothing but settlement. When I decide to pay him, future economic benefit outflow is expected. So, what is the meaning of this? My cash will go out. Correct or no? I purchased goods from Mr. A on credit. The moment I purchase the goods, purchase of goods become my past event. Whatever I need to pay him becomes my obligation. That obligation is becoming because of my past event. What is my past event? Purchase of goods. On when the day comes when I have to pay him, that is called as settlement. So when I settle the transaction, my cash will go out of my business. It is nothing but future economic benefit outflow. Understanding? This is where your creditor fits the definition of liability. Obligation arising from past event. Creditor. Correct? What was the past event? I would have purchased goods from that creditor on credit, on settlement of which future economic benefit outflow is expected. How? By paying the cash or bank. Let's take example of loan. Correct? So when we take the loan, we get the money. Now whether loan fits under asset or liability, let's see. Let's first go to asset. Is it a resource controlled by the entity loan? Can I say I will not pay the loan and he will leave me? Huh? Banker will come to your house. Banker can say, hey, no, I don't want your loan, give, go. But can I say I will not give loan? So is it controlled by the entity? Correct? It is not controlled by the entity. So asset definition is not getting fulfilled. Let's come to liability definition. Is it an obligation arising from the past event? Yes. The moment I took the loan, I am obligated to repay back the loan. Correct or no? Arising from the past event. Correct? Yes. Next. Do I need to repay that loan or is it for free? I need to repay. Correct or no? So the repayment is nothing but settlement. On repayment, what will go out? My cash or bank will go out. That is nothing but future economic benefit outflow. Understanding everybody. Take example of anything, sir. You want me to take anything in liability? You tell me, I'll take it. Loan done, creditors done. What else you want? Saka? Asset side Saka? Understood the definition clearly? So this is what you have, their definition, asset. So here they have used the word owned or controlled. In your exams, try to write this as first word, this as second word. Controlled is important. Owned is comes later. Clear? Yes, everybody? Okay. Now, example, land and building, machinery, equipment, furniture, fixtures, patent, trademarks, stock, inventory, cash and bank balance. All this fits our asset definition. Is that clear? Everybody? Next, events, transaction or activities to be measured. Events are the economic activities or financial transactions that affect financial position of the business. In other words, events are those transactions which have finance in nature, and monetary in nature. Only those will have impact on our financial positions or financial performance. Correct? Only those events and transactions can be recorded which can be expressed in terms of money. In other words, clear? So sales, is it an event and transaction? Yes. Why? It can be expressed in terms of money. Clear? Sir, employee A helped employee B in learning something. Clear? So those are your sales, purchase, rent paid, salary, depreciation, tax liability. Everybody is clear? Yes? Okay. So a company sells goods worth rupees 50,000. This is an event that increases the revenue. A paying electricity bill of 5,000. This is an event that reduces the profit. That means it has a financial nature in nature, so which will impact our financial position or financial performance. Clear? Yes, everybody? Okay. Let's see key differences between objects and events. See, objects are nothing but, remember, assets. Use the word assets only. Let's not use the word objects. Let's here use the word events. Things the business owns or controls. Correct or no? Asset is which can be owned or which can be controlled. Here, can it be controlled or owned? No, that is actions. It has happened. Actions that affect the business finances. Events or transactions are actions. Correct. You sold goods. That is a action or a transaction. Correct. Example, land, building, machinery, patent, stock. Example, sale, purchase, salary, rent, depreciation. Nature, static. They exist over time. They occur frequently. Sir, events and transactions keep occurring every day. Correct. But assets will come depending upon the transaction. If the transaction happens, then assets might come. Say for example, I sold goods for cash. Transaction is captured, asset will also get captured. How? It will increase my cash. Correct. Sir, purchased plant and machinery, will it happen regularly? Will you purchase plant and machinery every day? It happens occasionally. Clear? It is a balance sheet item. It is a P&L item. Here, one more example of static and dynamic is understand. In P&L, any item can come. Different item can come. Sales might come, purchase might come, discount might come, cash discount might come, trade discount might can come, quantity discount might come. So many items you can give in P&L, but in balance sheet static. What are the items? Fixed assets, debtors, cash, bank, ಅಷ್ಟೇ. ಅದರೊಳಗಡೆ ಟ್ರಾನ್ಸಾಕ್ಷನ್ ಆಗ್ತವೆ, but items will remain same. Clear? Everybody following me? Yes? Okay. So today let's wind up for this. Tomorrow's class will be completing this chapter and moving to the next chapter. Thank you everyone.